that it? Cool. There we go. Uneducated Economist, everybody. Thank you for being here. Today we're going to be talking about how Donald Trump has yet again come out blasting the Federal Reserve, especially Jerome Powell, for not doing his job properly. Basically saying that Jerome Powell is too late and that they will essentially blow it. Right now, this is something that we have talked about quite a bit on this channel, talking about how it is that Donald Trump absolutely hates the Federal Reserve, constantly is blasting Jerome Powell, has everyone believing that Jerome Powell has no clue what he's doing, let alone the Federal Reserve knowing what they are doing. And he constantly pushes this out there. Now, when I think about what it is that ends up resulting from this delivery of this sort of information, is that it ends up causing the people to have an elevated inflation expectation. They think that Jerome Powell is going to screw it up, that everything is going to go wrong, that Donald Trump is the smartest person in the entire world, and at least that's the way that he portrays himself when it comes to understanding what's taken place within the economy. But yet every time I hear him say something like this, where Donald Trump is saying that Jerome Powell is screwing it up, how the Federal Reserve doesn't know what they are doing and that they should be listening to him, I have yet to hear any kind of real long-term strategy for monetary policy being delivered by Donald Trump, outside of they're screwing it up and they don't know what they are doing. Right? I mean, that's the entirety of it, because he really doesn't have a monetary policy strategy to deliver. The monetary policy that is being delivered by the Federal Reserve goes on beyond. It goes way beyond administrations. It goes beyond that of Biden. It goes beyond that of Trump. It goes beyond that of any other president who is out there, because the Federal Reserve is playing a game that is separate from politics. And I know a lot of people will not believe that, and that's fine. You can go ahead and take on any kind of understanding or meaning that you want to put behind the information. I have studied monetary policy being communicated by the Federal Reserve going on 20 plus years now. I have read through literally hundreds and hundreds, probably even close to thousands of speeches given by the Federal Reserve. And when they talk about monetary policy, they include nothing, literally nothing with politics. Not a single word. Cannot find it. If I could find it, I would give you that information. I cannot find it anywhere. So when I think about the monetary policy that is being conducted by the Federal Reserve, what I feel that they are doing and what they are delivering to the economy right now is absolutely what they said that they were going to do. They did not screw up. They did not blow it. They do not fail to understand what it is that they have positioned themselves for. They are very much in line with everything that they said that they wanted. If you take it back to John Williams, who is the New York Fed president, incredibly influential at the Federal Reserve, in 2018, he said it in a speech: monetary policy strategies for a low neutral interest rate world. The problem we need to solve these days is the risk of inflation that is persistently too low. That's what John Williams said that they needed to solve, was a risk of inflation that was persistently too low. Meaning that they needed a risk of inflation that is persistently too high. That would solve their problem. If they had inflation expectation that was persistently too high, it would solve the Fed's problem. What do we have? What do we have? We have inflation expectation that is persistently high. This is exactly what the Federal Reserve was looking for. You know, to think about what it is that Jerome Powell could even possibly do as an individual, nothing except for change his one vote. He doesn't communicate to the public his own opinion. He is communicating to the public on behalf of the FOMC, the Federal Open Market Committee. 12 voting members on monetary policy, 5 alternates, and 2 advisors. Those people make up the monetary policy strategy, not the president, not politics, not Congress, not anybody that you vote for. They don't do it. It's bankers. Private banking organization delivers monetary policy. These handful of people, 12 voting members, 5 alternates, and 2 advisors, have more impact on people's lives than just about any other group of people out there, and nobody knows who they are. Literally nobody knows who they are. Right? How many people can talk about the opinions of Michelle Bowman or Phillips Jefferson? How about Kashkari? Does anybody know who these people are? Hardly. If you are somebody who is deep into understanding or trying to understand economics, these names may ring a bell. But very few people truly go and look for what it is that these people are communicating, what it is that their opinions are delivering. Because once you understand these people, these 12 voting members, 5 alternates, and 2 advisors, once you know these people and you understand what it is that they are communicating as far as monetary policy, all of a sudden politics is just nothing but noise. They might have a political opinion. Right? No doubt about it. Everybody has a political opinion. Even if you try to be a political atheist or agnostic or whatever, you're still going to have a political opinion. So there's no doubt in my mind that that is an opinion that they all have, is a political opinion, but they do not incorporate that into the monetary policy strategy because I cannot find it anywhere. I cannot find it anywhere in any of the information that I have dug up and tried to internalize to understand what it is that the Federal Reserve is truly attempting to do. Because when I go to the mainstream media, it's nothing but garbage. Literally garbage. There is nothing within the mainstream media that is being delivered that is accurate information. It's not lies, right? It's fact. I mean, there's facts in there, but it's not accurate. It's gaslighting at its finest. It is allowing you to believe that the efforts of the administration and the efforts of the banking system is one that is not what you believe, right? It's literally not. The easiest way to find this is to think about what it is that the Federal Reserve is attempting to do with inflation. If you believe that they are attempting to get it down to a 2% target, I suggest you go and read the most recent speech delivered by Jerome Powell just 3 days ago. In that speech, he clearly communicates that they were trying to achieve an inflation scenario that was moderately above 2% for some time. How many times have you heard me say that on this channel? 2,000-3,000 times maybe? How many times have you heard that on other people's YouTube channels? How many times have you heard that in a mainstream media interview, article, anywhere? None, zero, zip, zilch, nothing, right? People have no clue that the Federal Reserve was truly attempting to have a monetary policy that was achieving an inflation rate that was moderately above 2% to make up for the fact that they failed to achieve the 2% target over the previous 10 years. They changed the way that they conduct themselves. Nobody knew it. Nobody saw it. Nobody believes it. But yet the Federal Reserve has clearly communicated that out there, or else the uneducated economists wouldn't be so adamant about it. Saying, guys, they are not going for a 2% target. They want elevated inflation. They want it above 2%. They want it to be there consistently for a long period of time. Getting high, staying high. The Fed loves being high. How many times did I say this stuff? I've been going back years, and it's all to raise the neutral interest rate. See, if you have an elevated inflation expectation, it will raise the neutral interest rate. By raising the neutral interest rate and the Federal Reserve standing still with the Fed funds rate, it makes the economy less restricted. We go over this constantly. I did a video on this exact topic yesterday. Right? This is how the Federal Reserve is conducting monetary policy. The stuff that Donald Trump is talking about is artistic fantasies. He doesn't have a strategy. He just says his strategy is to communicate that the Fed screwed up. That's his entirety of his strategy. The entirety of it. That's like, it's no strategy whatsoever. There is no monetary policy strategy coming from Donald Trump. Zero. There's none. It's because he doesn't have one. The monetary policy strategy coming from the Federal Reserve is using Donald Trump's communication about how the Fed screwed up to take advantage of the situation, raise the inflation expectation, raising the neutral interest rate, making the economy less restricted, and the Federal Reserve got to sit on their hands the entire time. That's what's happening. Like, I don't know how many other people see it that way. Pretty much nobody, but the Federal Reserve sees it that way, because I wouldn't have been able to even say that if it wasn't for the fact that the Fed is communicating it. Right? It's almost to the level of frustrating to see how much misguided information is being pushed out there, and especially coming from the president. It's like the worst of it. It's like literally the worst of the information that is being delivered is coming straight from the administration's mouth, straight from the president's face. Okay? And again, like once you see it this way and then you realize, man, these two are pals, man. They're best buds. There's no way that the inflation expectation would rise as dramatically as it would if it wasn't for Donald Trump screaming, the Fed screwed up, they don't know what they're doing, tariffs, 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 right? All this stuff is creating an environment that is actually benefiting the Fed. Nobody sees it that way because it's not communicated to them that way. And instead, it's communicated to them, they screwed up. And by delivering that information, people take that information. The Fed doesn't know what they're doing. They screwed up. They have no idea what to do. We're all going to burn in hell and die because of it. And because of that delivery of that misguided, misunderstood information, it raises the inflation expectation, and the Federal Reserve sits in the background doing a happy dance. Right? I mean, if you see it any other way from this, then you will not understand the monetary policy. This is why everybody thinks that the Fed screwed it up. It's because they can't internalize it the way that I had just communicated it, even though that's truly the way that the Federal Reserve is doing this. Nobody knows it except for the Federal Reserve and their speeches and the uneducated economist who happens to deliver the information to the people. But everybody else is going to look at it much differently. And they're going to see it as the Fed screwed up because that's the only information that they get out there. Okay? Even the whole idea that Powell obviously didn't know what he was talking about when they said that the inflation was going to be transitory, right? Because people think that that was a screw up within itself. It elevated the inflation expectation. It was another tool of benefit to the Federal Reserve to say that the inflation was transitory when it wasn't transitory, right? Or when the people believed it wasn't transitory, because that elevates the inflation expectation. And again, that is what the Federal Reserve was looking for. Any way that they could get inflation expectation to be elevated was going to benefit to them. So by screaming out at the top of their lungs that the Fed doesn't, like the administration and all these economists and all these people out there, by screaming out there that the Fed is screwed up, don't know what they're doing, they blow it, right? Too late, all that other stuff. Every time you get that information delivered to you, it raises your inflation expectation, and the Fed again is back there going, man, this is too easy. Right? All right. Annual inflation, his year low for Trump must be stopped. I don't know. All right. We're living in a West world out here chasing our tails from cradle to grave. Fed can't fix transition to command economy. Going to be rough no matter what. Why does an elevated inflation expectation benefit the Fed? Okay, again, it has to do with something called the neutral interest rate. This is a question that I get quite a bit. I've done a lot of videos on this. Now, the Federal Reserve is in a position in which that they are restricting the economy. The only way that that is a restriction to the economy, the position of the Fed funds rate, is because there's something called a neutral interest rate. When the Fed is neither accommodating nor restricting the economy, there's a spot in there where they are neutral. Now, that neutral rate is not set in stone. It can move on its own, right? If you have elevated inflation, an elevated inflation expectation, it'll pull that neutral interest rate up over time. If you have a low inflation expectation and low inflation within the economy, then the neutral interest rate will gradually fall. Now, the problem that the Federal Reserve was facing is that the neutral interest rate was really close to zero. And so when the Federal Reserve, and I'm talking, we're talking back in the great financial crisis even, right? Years ago, going back 20 years. The problem that the Fed was facing is that when the neutral interest rate is really close to zero, if the economy goes into a downturn, recessionary pressures start to kick in, job losses are increasing or something, the Federal Reserve would typically want to drop interest rates in order to stimulate the economy. But the problem that they were facing is that when they dropped interest rates to zero, they were barely below neutral. It wasn't enough to stimulate the economy. They had essentially run out of monetary policy. That right there is so critical to understand. If you do not understand that part, you need to rewind this video, go back and watch and the last minute, and internalize that, because once you get that part of it, all of it starts to make a lot more sense. This neutral interest rate being very close to zero means that when the Fed dropped rates to zero, right, they couldn't stimulate the economy because they could not get far enough below neutral. Now, this is where quantitative easing and lots of job owning, and that's, delivering of information through their words, right? This is what started stimulating the economy, and the pushing and the belief that they would be at low interest rates or zero interest rate policy for a significant amount of time going into the future. That is what that impression that was put upon the people, that would be an inflationary scenario, is what actually saved the monetary policy. It wasn't the interest rate adjustments, it was the delivery of information about quantitative easing, zero interest rate policies going into the future for a significant amount of time, and that is what stimulated the economy. It did not, right? Even with all the money printing, quantitative easing 1, 2, 3, and 4, printing of massive amounts of money, expanding the Fed's balance sheet from $850 billion to over $4.5 trillion, and it failed. It failed to produce an inflationary scenario. And this is all because of this low neutral interest rate. It could not stimulate the economy. All right. So now what the Federal Reserve is attempting to do is to have elevated inflation expectations persistently going into the future. If you can raise the inflation expectation significantly, have it persistent into the future, hyperinflation scenario, right? If you can push that into the people's thoughts, into their actions, and into their belief system, what will end up happening is they will demand a higher return for their capital investments. If I'm going to loan you money in an inflationary environment, I expect a higher interest rate. Interest rates start to move up on the demand for higher returns on capital investments in an inflationary scenario. And you will also expect to pay a higher price on whatever it is that you buy, because you believe that there is an inflationary scenario. Limitations through supply chain breakdowns, money printing, whatever it is that you believe, right? It doesn't have to actually occur, just your belief system will then increase the prices because you anticipate higher prices. You will then accept higher prices. Inflationary scenario starts to be built from this. If you start to increase the inflationary scenario and the expectations, it will pull that neutral interest rate ever higher. So now if you have a Federal Reserve Fed funds rate that is sitting still, right? They dropped it a little bit, but now it's still elevated, and you have a neutral interest rate that is moving up on an elevated inflation expectation, right? Higher inflation expectation, raising the neutral interest rate over time, right? It takes time for this to happen. It gets ever closer to the Fed funds rate, this neutral rate where they are neither accommodating nor restricting the economy. Remember, the Fed is sitting still. They're not doing anything. Wait and see, data dependent, all this other shit that they talk about, right? But meanwhile, your inflation expectation due to tariffs, due to global supply chain breakdowns, due to all the crap that's going on right now, it raises the inflation expectation, pulls the neutral interest rate ever closer to the Fed funds rate. This is making the economy less restricted. This is a benefit to not only the economy, but also to the Federal Reserve's monetary policy, because if you can move that neutral interest rate ever higher, you may actually be able to pull the neutral interest rate above the Fed funds rate. The Fed still standing still, hasn't moved, data dependent, waiting for the information to be delivered, now has a neutral interest rate. This is hypothetical, by the way, what I'm talking about right now, but if it does continue, pulls that neutral interest rate above the Fed funds rate, now you have a stimulating monetary policy, and the Fed is still just sitting still, hasn't done anything yet. Sitting on their hands, data dependent, waiting to see what happens with tariffs. Inflation expectation pulls the neutral interest rate above the Fed funds rate. Now the Federal Reserve is in a stimulating monetary policy, and they have not done anything. They have sat on their hands the entire time waiting. Right? Now, if they were to lower interest rates back down to zero, they would be significantly below that neutral interest rate that they could actually stimulate the economy with the lowering of rates. But the point being is that they have to raise the neutral interest rate by having elevated inflation expectation, that it gets delivered persistently into the economy, to the people's ideas, beliefs, and thought systems in order to raise that neutral interest rate. That is what is occurring right now. That is what has taken place. That is the whole point. That is what the Federal Reserve has communicated. That is their monetary policy. We will find out more about that in their consensus statement that will be reevaluated and reviewed and delivered to us here sometime in this summer, right? If you see it any other way than that, it's inaccurate. I'm sorry. I don't mean to call you out for being misinformed or ignorant or whatever. I'm not trying to be that way. This is the information that the Federal Reserve has communicated. It's what I have internalized from all the speeches and everything that I have read. I realize that that information is not delivered to the mainstream media, although there is some articles that came out right after Jerome's speech that did deliver that information, but I bet that you'll probably find that to be very much limited, and you will not find that strategy being delivered into the mainstream media articles after this. Right? It'll go right back to that 2% target, believing that the Fed is trying to get inflation down. They're not. They want elevated inflation to raise that neutral interest rate to make their monetary policy more effective. That's it. That's what they're up to. Right? And again, I know that's really confusing for a lot of people, especially if you're new to this channel. If you've been here for a long time, like if you've been here for years, everything that I just talked about for the last 5-10 minutes there, that's old news. Right? That is so old news. You're like, dude, do you have anything new to talk about? However, since most people don't see it that way, I am going to be persistent in delivering that information because that is the accurate monetary policy. Literally 99.9% of the people do not see it. That's all there is to it. All right. Wow, look at all these comments. Okay, I got a few more minutes here. Okay, I got shit to do. Enjoy the weekend, everybody. All right, Jeff, thank you so much for being here. This guy in the $1,500 truck on break at Harbor Freight says you're a dummy. Okay, first of all, I'm not on break from Harbor Freight. I've been doing this a very long time. I don't need some comment in here to devalue what it is that I have performed in my life, especially being on stage, speaking with some of the greatest economists in the entire world, sharing the stage with the likes of G. Edward Griffin and Robert Kiyosaki and Brent Johnson and Ron Paul and many, many other, Jeff Snyder, and I don't know, the list goes on. Lynette Zhang, I mean, Lynn Alden. I mean, it just goes on and on. I know these people personally. I've met them. I've been on the same stage, spoke to the same audience. I don't need somebody who's going to tell me that, man, a $1,500 car proves how intelligent you really are. I could go buy a $150,000 car if I wanted to. I drive this $3,000 Suburban because it is going to make me rich by driving a POS. And that's another video that I had delivered to the people years ago that has literally 600,000 views and so many compliments and thank yous for the appreciation to know that driving a new vehicle is going to make you broke. So don't follow the channel if you don't like it, man. I'm not calling you a dummy. I'm just saying that most people do not have this information. All right, speaking of Harbor, okay, I can't even buy a $150 car. First rule, don't feed the trolls. Yeah, it's to create distraction. It is. What did I say about cussing? Oh, yeah, that was me. Sorry, Brody. I'll back off. My bad. Sorry, Brody. Don't ban me. All right. They can't cut rates with tariff, inflation, uncertainty. They don't know, nor do they want to. Like, I mean, why would they want to? They don't want to. They want elevated inflation. They want elevated interest rates. They want to be high, getting high, and staying high. I mean, I did a video years ago. The Fed wants to be high, getting high, staying high. Tariffs or not, it doesn't matter. They want elevated interest rates. They want elevated inflation expectations. It's being delivered. This is exactly what they're looking for. All right. Different strokes for different folks. Cars are my vice, but luckily I can afford it. Yeah, Zoner, that's the difference is this. Some people really enjoy their car for a hobby, right? That's some people. They like keeping it clean, they like detailing it, they like buying all these accessories for it, they, all the other things that go along with the vehicle. That's their hobby. It's what they enjoy spending time on. That is a different story, right? I'm not talking about a hobby. I'm talking about a vehicle for transportation, right? Do you realize how much money I was able to save by driving a $500 Toyota Corolla? I was able to save $42,000 to put down on a house. You know how much I would have been able to save had I been driving a new vehicle during that time? Nothing. Right? Literally 4 years. Right? I drove crap cars, and still do, right? I drove those crappy vehicles with no payments and cheap insurance and good gas mileage for years. Having people make fun of me, talking about how, you know, a Toyota Corolla is just proving how homeless I am or something of that nature. I was able to buy a house. I can't buy a house if I have a new car. Like, people are like, why don't you get a new car? It was just like, nah, I'd rather buy a house. Right? But other people who want to drive a new car, they don't get to buy a house because they want to drive a new car. You know? Like, that's not me. Like, you know, I'm not into it. I would rather have real estate. I spend the money I save on Bitcoin and stocks. Chicks don't care about your car you drive. They care about the inner man. That's it. Right? I never paid for a vehicle I couldn't save up for till I got one that was well worth it and lasted. Most wealthy people drive used Ford F-150s. Not impossible to bring back manufacturing. It kind of is. A trade deficit will remain. Tailor each tariff, implement a tax on foreign capital, and negotiate trade agreements with all other trade deficit nations. Okay, I agree that there is some attempt and strategy to try and alleviate the problem. The fact is, though, is that you are directly pushing against an economic force. It's like saying we can fly a plane forever, never land it, never have to refuel it, never runs out of, or I mean, it has forever energy and never wears out, right? Never has a mechanical failure or anything like that. That's literally what you're trying to describe. It doesn't work, right? Eventually there will be a failure to it. There's underlying economic forces that are at play, and you have to address those underlying economic forces. The underlying economic forces is that once you have become an industrious person, right? An industrious county, an industrious state, an industrious nation. Once you have become industrious, you will raise your standard of living, right? You have increased your income. Once you have increased your income, that hard work wants to be rewarded with a higher standard of living. The moment that you increase your standard of living, now you have an economic force that is at play. That means that foreign competition is going to start encroaching in on your domestic manufacturing because they're going to be doing it cheaper than what you can do it. Can you add tariffs? Can you add subsidies? Can you add rules and regulations and all this other stuff? Yes, absolutely. That is inventing the machine that can fly forever, right? But it doesn't mean that the underlying economic forces aren't at play and they're building. And at some point, that plane, that magnificent, everlasting energy that can make this aircraft continue to be in operation will eventually find some parts wearing out, something won't work, and it will come down to the ground because there is gravity. The natural force is there always, regardless of if you build something with incredible precision, right? There is going to be some failure at some point because the natural occurrence is gravity will pull it to the earth again, right? That's important to understand. The underlying economic forces are always going to be there regardless of the efforts. In fact, if you were to try and do something to push against the underlying economic forces, then what you will do is you will have ever increasing amounts of government interaction, not only into encroaching in your life, encroaching in the subsidies, encroaching in the tariffs, encroaching in on everything it is that we are doing because it's not a natural economic force that is allowing for us to be industrious. It's coming from them creating a situation that they have to constantly maintain and control. The moment that they can't do it, the underlying economic forces wipes it all out. Right? It must be understood that way. Because yes, you can have a government force a rule and then put a gun to your head and make you follow that rule. But at some point, the underlying economic force is going to be there, just like gravity. It will pull it back to earth at some point. You know? All right, let's check out this $5 super chat. How much time do I have? Okay, I got like 10 minutes left here, guys. All right, Jack, thank you for the $5, man. If the Fed were to end, what would come out of that? It would be a horrible event, man. Most people don't realize that we live off of the production of other nations. All right. If you end the Fed, what you are going to end is the fiat currency system. Now, don't get me wrong. Me personally, I'm down for it. Like, I would totally be down for something like that, and I would like try to excel in that sort of environment because I've at least thought about it, right? I mean, I thought about what it is that I may do, how it is that precious metals can incorporate into a new economy or even cryptocurrencies or something of that nature. Like, I've thought about it. The problem that we face now is that the Federal Reserve has provided us with the ability to do an insane amount of transactions. That means if we can do transactions, we can convert our time and effort and energy into other people's time, effort, and energy. Meaning that if we want to use our skills to eat, we need to be able to have something to transact in. Dollars are by far the most efficient, most plentiful way of doing that. Could we do it in silver? Sure, absolutely. Silver is limited. If you don't have silver, you don't get to eat, no matter how good your skills are. If all the silver is being hoarded away, how is it that you're going to be transacting? You can't, because there's a limited amount of silver. This is called the business cycle. It's exactly what the economy would face regularly. It's called an equilibrium of the wealth, right? Because once you have concentrated the wealth, an equilibrium will take place. Concentrated again, equilibrium takes place. This is the business cycle, right? And so understanding that that's the position that you would be in, cool, let's go for it. Most people have no clue about how it is that they need to handle themselves, because the moment that the business cycle starts to slow down and there's a less amount of money in the system and there's less transactions taking place and people start bitching because they're hungry, they're not going to know how to handle that. Right now, they just tell the government, fire up the printing presses. All right. So all of a sudden, debt issuance starts coming out, and the Federal Reserve's buying that debt issuance, and the money's flying everywhere, and stimulus packages and all kinds of, none of that stuff would exist. It wouldn't exist. It would be like, hey man, you're hungry? That's too bad. Sorry. Go find somebody who's charitable, and hopefully they'll give you something, because there's nothing that they can do because they can't fire up the printing presses. They're limited on the amount that they can do. They could tax, sure, right? Who are you going to tax? The people who are creating jobs? Well, you need jobs for people to eat. So you're going to tax the people and then just give that money right to the poor who are not working for it? I mean, this is, again, doesn't sound very pleasant to me, right? I mean, I could understand that that would be the situation that we would in. I would avoid that. I would try and position myself to take advantage of that sort of thing. But looking out there, 90% of the people would probably have no clue of how to conduct themselves. Like literally none. They would be wondering why the government isn't doing something, not realizing that they simply can't. You know? So, good or bad or ugly, I mean that's the meaning that you've given it. I mean, I personally think I could excel in an environment like that, just simply because I at least contemplated what it would be like. You know, most people don't have any idea on what that would be like. Even if they were to try and, like, you know, man, imagine him with no money. Oh, wow, thank you so much, Big Boss, for the $20, man. Very cool of you. Good day, Simon. Thank you for your consistent content. What type of economy will exist in the future to replace the fiat currency? Some say digital. However, the goal of the Federal Reserve is negative inflation. No, negative interest rates. Correct? It's not negative inflation. They want consistent inflation, you know, moderately above that 2% for the time being anyway. Consistent around 2% on the long run. All right. So what kind of economy will we go in when the fiat currency system fails? I don't believe that we are going to have a failure of the fiat currency system. I do believe we will be moving into a cashless society and the use of a digital currency, not necessarily here in the United States. I don't think that we will have like a central bank digital currency like a Fed coin. I don't believe that will be the case. I think what we will have is stable coins, which is essentially a cryptocurrency that is being backed by the dollar. So for every dollar that is in the vault, so to speak, there's a stable coin that is issued being representative of that dollar that is sitting in the vault, right? So that's kind of the simplest way to understand a stable coin. It can also be backed by short-term treasury debt and all these other things. Anyhow, understanding that the stable coin will then be what is used like cash, and cash will be pulled out of the system. And the reason why they will do it this way is because the Federal Reserve cannot inject money directly into the system, regardless of what a lot of people think out there. They can't do it, right? What they have to do is they have to buy an asset that has already been purchased. So the Federal Reserve doesn't go directly to the Treasury with like the printing press, go pull out a bunch of money and then go to the Treasury and say, hey, we want to buy your Treasury debts, right? Your bonds. They can't do it that way. The Treasury sells their bonds, the government bonds, to what they refer to as the primary dealers, which are the big banks. Then the Federal Reserve goes to the primary dealers and buys those bonds from those primary dealers. So what they are buying, the Fed, is something that has already been purchased. They are buying something off the secondary market. Now, I know that's like, probably neither here nor there for most people, but to understand that the direct injection of money into the system is not necessarily allowed, right? Although that's what happens. That buying of treasuries directly would be referred to as monetizing the debt, and that's something that they are not allowed to do, even though that's essentially what they are doing. Now, again, I don't want to get too deep into it. It gets confusing all on its own. The economy that we are going to experience going into the future is that of those stable coins, banks, individuals, insurance companies, investment companies, whatever. They're all going to be loaded up on these stable coins where cash is going to be removed from the system. Once the cash has been removed from the system, now all you have is these stable coins that is essentially being backed by dollars. The Federal Reserve can conduct their monetary policy the way they normally do it. That monetary policy would then transfer through the dollars and directly into the stablecoin. Now the government itself can regulate the stablecoins. The Federal Reserve can deal with their monetary policy the way they've always done it, leaving the stablecoin regulations up to the government. And now you have a position in which you don't have cash in the system. Everybody's using these stablecoins, and now interest rates can be taken into negative territory because you cannot pull your money out in cash. It's stuck in that stablecoin. See, this is how they're going to do it. Then make cash a nuisance. Right? Make it a nuisance. Make it a fee to deposit or withdraw that money. So cash would just simply be eliminated out of the system altogether because people would find it a nuisance to use it. They would pay more to use it, right, as opposed to the stable coin. That's the type of environment that I believe we're moving into. Thank you so much for the $20. Thank you everybody for being here. I got literally 2 minutes to get back to lunch or get back to work from lunch. I'm just going to read one more comment here and call it good. What's the big huff regarding the Moody's downgrade, the U.S. credit rating? Okay, so that's important to also understand is that the U.S. credit rating has investment grade assets, right? So an investment grade asset means that it has a high credit rating to it. Having an investment grade asset means that everybody has access to your particular instrument of debt. So when the U.S. Treasury has an investment grade to it, retirement funds, insurance companies, all these other people, they can buy these things. But if it falls below a particular grade, well, then retirement funds can't hold on to those things because they have to be at a particular grade. Right? So when Moody's downgrades the U.S. Treasury debt, what they are doing is they are limiting the amount of people out there who would have access to purchasing those things. If it falls below, like again, if it falls far enough, then they have to literally unload that off of their balance sheets. Like the retirement funds have to get rid of them because they can't have them on their balance sheet. So that's the big deal with it. That's why people are so lit up about it, is like if it falls far enough, then, essentially it becomes like a non-safe investment grade instrument of investment or instrument of debt. So this is where like the major concern is that all of a sudden, like, all these people who hold U.S. Treasuries wouldn't be allowed to. Okay, I gotta go. Thank you all for being here. Thank you so much for hitting that like button. Thank you very much for the super chats. We got $25 in super chats because you guys are always so very generous with the support of the Uneducated Economist. And I left a link down in the description, as always, to the article, but also to the Uneducated Economist podcast. We're trying to build up a viewership over there, trying to get more audience, more likes, more subscribes, stuff like that going on, and build that podcast up. The old podcast is no longer got new videos being posted to it. So those of you who really would rather listen to these videos as opposed to watching them here on YouTube, you'll have access to those on the podcast when they get uploaded. Thank you very much for being here. Uneducated Economist, you guys let me know. Did this guy say that he shares stages with great economists and then named a bunch of gold shills, non-economists? Robert, well, you picked one name out of all those? Bro, really? Okay. Yeah, you should probably find another channel. Adios. Uneducated Economist, you let me know.